Well, hello members. Let's take a look at what happened last week, what it probably portrays for the coming week. This is February 28th. We had gains last week, pretty decent in size. Cutting down the losses on the year. You can still see technology, small caps, the big drag, S&P about 5% down. So essentially we got that follow through we thought we might get. And now the question is, can you continue on? So let's look at the summary here. Last week my thoughts were that the NASDAQ would probably see push back to around 4,400 and then we'd get some sort of an ABCD structure. And that is pretty much what took place. Although it didn't quite happen the way I envisioned it, we still saw it take place in that form. So now you have the ABCD type structure right in place to try to take this thing higher. And so the question now is can they take it higher? And that's going to be the question this week. If we look at the three indexes that we were watching, which was the NASDAQ, the NDX, and the DAX, right? All of those now have gotten over their bearish retest regen zone. So, and they've held them, right? So here's the NASDAQ clearly over it. If we look at the NDX, also clearly over it, right? If we draw it in here, you can see it. So all of these and the DAX did the same thing. They've gotten over it. They're fairly clearly over it at this point, with the DAX being the one that's just barely over it, but over it, right? It got over it here, fell back under it. Now it's just barely back over it, slightly over it at the end of the day. Price point 95.13, and the top of that was 94.90. So the first thing to ask yourself is, okay, what does that mean, right? And what it means is that typically when you get over it and you hold over it, that says that whatever trend was in effect, which in this case was down, now has been, we got an early warning sign that this is trying to go this way. Now, for actually to get a trend transition, you got to break swing point highs, which means the DAX would need to get up to this level, right? And if we look back over at the NASDAQ and the NDX, they would need to get over their swing point high, and they're right at it, right? They touched up into it Friday trying to get to it. And if you look at the S&P 500, right, that was the first one to get over that bearish retest regenerate zone. So if I draw that in, the zone was here. So the break was on this swing point low. We got over it, right? And now we get over the swing point high with this trend transition here. So you would expect that early warning side eventually leads to the actual transition. And if we look at the trend transitions on the indexes and the sectors, right? I mean, that is already what's starting to take place. Sideways on the Dow Jones, sideways on the S&P 500, sideways to bullish on all the short-term trends on the various sectors, right? That's the sort of thing that should happen and is happening. You've just got a couple that still haven't gotten to the bullish case, right, or a few, but you've got bullish now on staples. You've got it on these. So you're seeing that trend transition already take place here, right, which on the sectors eventually leads the indexes to do the same thing, right? And eventually, if these hold long enough, you'll see the change over here, and that's really what we're going to talk about when we get to what's next. So in summary, right, the worst is probably over near term, daily time frames, and we should expect higher prices to print before this is all over. Now the big picture, right, is that we have successful test of the lows, and we have that across the board in domestic markets with the exception of the small caps, right? It's also the DAX, right, is having the issues in all of Asia. So other than the US and a few of the markets in Europe, well, most of the markets in Europe with the exception of the DAX, we have the test of those lows having taken place and it held. So if I bring over the S&P 500 on a monthly basis, here's the test of the October lows. You see the test, you see it take place, right, and you see it hold. And so if I draw the line across there, you can see that test. It's 2 months we tried to get underneath it, can't get underneath it. That suggests that we're going to try to bounce back the other way, which is what we're doing. And so that's a good thing, The bad thing is that you have a lot of damage in these places, and that damage isn't going to be repaired immediately, and it certainly hasn't been so far. So the takeaway is the world markets in general are much weaker than the domestics, and I think it's safe to say that if you correlate the dollar with that, that's a big part of what's happening overseas, which brings me to the fact of what is the dollar doing. And if you watched any of my shows or comments last week, I was scratching my head on the dollar, and the reason I was doing that is because the dollar wasn't doing what it should do. And I'm going to show you specifically what I'm talking about. The dollar should do a retest regenerate to the downside. In other words, it's been more than 6 bars, and typically when you're more than 6 bars and you're coming back up to test, you usually do not make it to the other side. You don't usually go all the way to the top. If I look at the price points, 25.44 on daily, got to 25.44 and closed there. So it's a full retest, an attempt to regenerate to down. But if you look at the euro, it doesn't look like it's going to regenerate down, because the euro actually had the exact situation on the opposite case. And so in other words, the euro was coming back to do a full retest regen, or actually coming back to do a retest regen. Not only did it end up doing a full retest regen, which was right there, it actually broke underneath it. And that's after more than 6 bars. That should not happen. It did. So something that shouldn't happen did happen. That tells us that this trend really isn't up anymore on the euro. It's at best it's sideways, right? So it's not this anymore. It's sideways. That's on this time frame. So what is it doing on longer term time frames? And so if we bring over the weekly chart on the euro is in this big range, and I'm going to bring up the monthly so it's a little cleaner to look at. And that big range is here, right? So the euro is holding in this range, and what has it done now? It's actually underneath, right, kind of the middle point here. It's actually, I'm going to redraw this because it's actually cleaner if you look at it from about right there. And so you have kind of the middle range being this area right in here, and it's up underneath it. And if you really wanted to draw it stickler, right, it would be right about there. And so in other words, it's right at the ledge trying to break under it and go test the bottom of this range again. That's on a long-term time frame, and that's on a ETF, in this case a currency, that's had its bounce, has had basically downtrends, right? Downtrends are in effect here, which means that at some point this sideways action, if it doesn't push to the top side, right, it is going to continue. And so the risk here is that the euro actually falls out of bed and breaks and goes to par with the US dollar. Now if it does that, and I'm going to go back to the dollar now, if it does that, then the dollar of course is going to do the opposite, because a big part of the weighting of the dollar is here. And I'm going to pull down to the monthly on this, and what you can see here is of course that big push up range trading, right? And now this is right at the top of its range, right, in terms of a smaller range inside here, and so, or the little ledge there. If the dollar gets into this area, the dollar is going to test the top, and if the dollar tests the top, there's a decent chance that the dollar is going to continue this move to the top side. And so if that's what's happening, right, this has big implications for a lot of things, not only equities, but which equities move and which don't. And so if I come back to the note, I've kind of summarized it here, right? It's going to be beneficial initially to most equity markets. It's going to be a problem for all the commodity markets. And if it does break higher, it's actually going to be a problem for all equity markets. And so that longer term is the bigger issue, and something we're going to need to keep our eye on. Which kind of leads me to the next thought, which is sector rotation. Anytime you get a move up in the markets, right, that we've seen in these equity markets. So in other words, we had a lot of selling, a lot of sell-off, and then we've got this kind of stabilization. So the sell-off, the stabilization now, and the attempt to push higher. To push higher, whatever led us on these first legs back up, right? So whatever led us here is probably not going to be what keeps us going, because they've already run their race, right? They need to hand the baton to somebody else. And so we have to see other sectors come in, and we have to see rotation of money. And it's not so much, for every buy there's a sell. So this notion of, the money's coming in is kind of a misnomer, because the same amount of money is kind of there, right? Because every time you send, the only way you get new money is you make new issues, right? And new money comes in for the new issues. Assuming that we don't have new IPOs and assuming we don't delist anybody, then it's the same amount of money. It's just a matter of how anxious the buyers are compared to the sellers. And so if we look at how a market continues to move higher, it's typically through sector rotation. So whatever led us on the way up takes a break, and other things have to replace it. And so if we're looking at what the initial leaders were, this has been the initial leaders. And if that dollar strength really happens, which it looks like it's going to try to take place, all of these are going to get hit. And so these are not going to be the leaders, maybe with the exception of the industrials, right? These are not going to get benefited by a stronger dollar. And actually, I take that out. Actually, the XLP and the industrials aren't particularly going to be hit, but everything else will. So where are we going to go, right? What's going to keep us going? And we're going to have to see that money move elsewhere where things look cheap. For example, the technology, maybe the financials, right? If we keep going here, there's other things we could move to: healthcare, consumer discretionary. And I've kind of put in all the subsectors inside those big four sectors and said, okay, these are the ones we should be focused on, and these are the ones I'll be focused on, trying to find the next set of trades to the upside if the move continues. And so I would think that that would be what you want to look at here, and that is what I will be looking at, is these subsectors and asking, okay, where is the anxiousness, the anxious money, should I say, moving to, and trying to catch a ride on those trades. That, of course, assumes we're going up. So what's the bottom line? We're at a point here where the easy money off that bottom is already been made, right? It's already happened. Now it's going to be more balanced. And what does it mean to move more balanced? That means we're going to be more sideways. We're going to have some things going up, some things going down. And if you're going to be buying things, you want to buy those that are going up. And if you want to short those that are going down. I don't think we're at that point where we want to do any serious shorting yet. And that kind of comes into potential scenarios, which I'll do next. But that would be the case, right? Ups and downs. And the fact that I don't want to stay in the same things I've been trying to press on is because these currencies are starting to move, and they're moving as unexpected, right? They're not as we expected. When that happens, right, the markets have to adjust. They have no choice because their expectations are being circumvented. In other words, something else is happening, and that's going to cause ripples. And that, to me, is the biggest wild card. So what are these potential scenarios? Last week, I think we hit it on the head pretty much. What's the best case? I think the best case is that the S&P 500 just breaks over the swing point high, which is done, and continues on. And so in other words, we move just straight on up from that swing point high we were at. We move straight on up to the swing point low and do the bearish retest regenerate. We're not that far away. This certainly is possible. So that's one scenario, and that's the best scenario, right? This happens, we move all the way up, and we push straight on up into the bearish retest regenerate. And at the same time, we would see the NASDAQ, the INDX, the Russell, all of them make it over the swing point high. And depending on which one we're looking at, I would think, for example, here on the NASDAQ, we would push as high as about 4710. Top of these bars. That to me is probably the best case scenario for the coming week. What's the worst case? Well, that's pretty easy. They just all fell, right? And they just start rolling back over. And what I would note is that in both of these cases, the MTTFs are going to support either of these, and that is that we're becoming extreme on the intermediate term time frame, but we're not that extreme yet. So if I pull over and pulled up the MTTFs for these, what you would see is that these are not extreme yet, right, the intermediate, and these have just turned. So in that case, we could get this best case. We also could get the worst case. In other words, these things just roll over and they go back the other way. And the reason we could get that is because, again, these could reassert and these have room to push to the downside before they ever change. So I can support either case, and that's why I said it's going to become more two-sided probably. What's the likely case? The likely case is that we take out those swing point highs on the NASDAQ and Russell I just showed you, the NDX, but we don't go anywhere. We just kind of sit there. And I suspect this is probably what we're going to see. Long-term themes still here. You can look at those fundamentals. I don't have a lot of data, or we don't have a lot of data this week, but what data is out there is important. The PMIs are going to be looked at, and certainly the employment number on Thursday. Beginning of the week, we actually, we're pretty much done with earnings. So the beginning of the week, we have the end of the first, or actually not the first quarter, we have the end of the February, beginning of March. Usually that's money rolling in for mutual funds. So that will be kind of a positive to start the week, but I don't think it's going to carry through. I think we're just going to sit there. So that's kind of where we're at. I think the next thing to do in this market, depending on what happens this week, do we get the case that we think, or do we get one of the other cases? We'll have to play our short-term trades based on which of these three scenarios look like they're playing out. That's it for this week. Thanks as always, and I'll talk to you next time. Bye.